Hey guys, how you doing? Hope you're all doing well. This strategy is called MACD and divergence strategy. It's a very good strategy. It has about a 60% winning rate. It can be better if you optimize it and modify it well and use it on certain timings, certain pairs. So you could basically use it however you want. And now let's begin teaching it. You need to know that we have a Telegram channel and it's called Almalekfx. Yeah, and this Telegram channel, we post our setups, our basic knowledge and everything over there. If you can't find it, you can basically go to the description and you'll find it in the description box, or you could go to our Instagram, which is called also Almalekfx, and you can find the Telegram channel URL on our Instagram's bio. Okay, let's begin teaching this strategy. The first thing that you need to understand is how to basically plot the indicator. So we go to indicator, we're going to search on MACD, and we're going to put this MACD right here. And this is the normal MACD that is found on TradingView. Then we could basically go on the indicators again and plot on the MTF EMA. And you're going to find it right here. You're going to double click because you want to. So you'll click once and twice. Okay. So you'll find this MTF EMA, and you're going to go on indicators again, and you're going to plot on ATR stops. And you'll put this one right here. Okay. So just make sure that you're using the same exact indicators. So with MACD, we're not going to do anything. With the MTF EMA, we're going to put the length into 50. We're going to put the resolution into 15 minutes, and we're going to plot it in the color purple. Okay, and we press OK. Then we're going to go into the second one, put the length 50. We're going to put it on 1 hour, and we're going to plot it on black. What we're going to use with this strategy is the 5 minutes time frame. And yeah, so what we need to understand that we need to know what divergence means. So basically a divergence is something like that. Is about an incline. This is in the buying. This is going to be in an inclining market. So what is divergence going to be is going to be an uptrend, then basically a move to the downside which corrects it. Then we're going to have a higher high, and this higher high, we need to know whether this higher high is creating a stronger push to the upside in regards to this higher high, or it's weaker in the push, whether it's weaker or stronger. So how would we know that? As you can see right here, we have a push to the upside, then a correction, then another push to the upside. But in MACD, this shows that we have weakness. Why? Because on this method, you can see that we moved up, then we corrected, then we moved up again. But on the MACD, we're showing divergence, which is a weak move to the upside. Okay. So with that being said, we have divergence. So in our strategy, what are we going to do basically? Our strategy is very, very simple. What you need to know that in the bearish trend, we need to have the moving average, which is the black one, above the purple one. Okay. And in an uptrend, we need to have the moving average, which is the black one, above, below the purple one. Okay. So with that being said, that's one condition of our strategy. Okay. That is one condition of our strategy. The second condition that we need to have is basically having a divergence. And as you can see that we have a divergence. You need to have a gap, which is the distance between the moving averages is a little bit high, just like that. We don't want them to be touching each other, because when they're touching each other, this is basically just consolidation. So as you can see, we are in a bearish trend, but we're correcting the move. Okay. What you need to also know that when we get a condition to sell, we need to have a divergence without this plot line, this blue line, touching the zero line, without touching the zero line. And as well as we need to have bulls, then we need to make a bear move, then we need to make this coming to green. So the bars need to be green, then need to be red, creating divergence. Then we need to have a green, and where the divergence happened, this is the correction. This is an up move, correction, then an up move. In this case, it might show as in 1 bar, 2 bars, 3 bars. It's not a problem. But as long as it has made a 1 bar, that is fine. And what we need to do is basically look for confirmations. And what are going to be our confirmations? Our confirmations is going to be like that. Once we have made this bullish move, then we created a bearish move. And what we need to have is a bearish candle and the bars turning red. As you can see right here, we have a bullish candle, but we have the bars turning red, so we'll wait. We have a bearish candle, the bars turn red, so we can basically make an entry here. Okay, when this candle has closed, we're gonna put our stop loss 2 pips above the swing high. Okay, 2 pips above the swing high, and our target is going to be by default 1 to 2. Okay. Now, what we need the ATR stops, which is this one. What we need the ATR stops. So, in the selling position, the ATR stop will be looking green. Okay, and the ATR stop will be like a magnet for the price to reach it. Okay, will be like a magnet for the price to reach it as our target. Okay. Now, with that being said, our target has already been fulfilled, which is a 1 to 2 RR. But if the ATR stop was somewhere around here and we haven't hit our target, then we need to go break even once the ATR stop has been touched. For that, this makes you be able to identify a possible retracement for this moving average, which is the ATR stop, which is looking in green. And as you can see here, we have hit the target, but the ATR stop was already far enough for us. There's something that I probably forgot, and I'm sorry about it. The ATR stops, we should have these settings like that, 5.5 and 5 as a period and the multiplier. Okay, so with that being said, we hit our target without needing the ATR stop. But if the ATR stop was here, we're gonna go break even once we touch the ATR stop and look for our target, which is going to be 1 to 2. See, when we And this is very important to know. When we give you a strategy, you need to backtest the strategy, maybe optimize it, maybe make it better, maybe look for the best entries, maybe look for the best pairs to trade, maybe look for the best timings to trade. Maybe the New York timing is going to be the best time for you. Maybe the New York timing is causing you a lot of trouble in trading. So maybe avoid the New York timing opening. Maybe you need to have a very high volume in the market in order for this strategy to work very well with you without hitting your stop loss. See, backtesting is very important. When we give out a strategy, this strategy needs to be optimized, needs to be backtested. As per my backtesting regarding this strategy, for the past 100 trades, I made 60 trades which were successful. So we have a 60% winning strategy on a 1 to 2 RR, which is really good because, and I wasn't moving stop loss at entry at the ATR stops. Maybe there are some trades which hit the target, but we could not, we just got break even or whatever. So these are very important elements that you need to understand. Once you understand these, you can develop any strategy that you want and become a very successful trader. I hope you guys understood the strategy, enjoyed the video. Please do not hesitate to like and share the video with your friends and family. I hope you all have a great one.